Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the TradingView Volume Footprint Chart, a powerful tool that can revolutionize your trading strategy. This innovative feature provides a detailed view of trading activities, helping you to analyze buying and selling pressure at specific price levels, and you would learn the best setting for this chart, and you will also discover the unique trading strategy for this chart. Whether you're a novice trader or a seasoned professional trader, this video would equip you with valuable insights to enhance your market analysis. So why not stay tuned until the end of this video to unlock the full potential of the volume footprint chart and take your trading to the next level. Now we start by putting on our volume chart by going to the bar area, the chart pattern area, and put on your volume footprint chart. And this is how the chart is. It comes in this form, and the TradingView Volume Footprint Chart is a tool that provides a detailed view of trading activities by displaying the distribution of volume across specific price levels. I just need to zoom in so that we would understand. It shows the specific price level within each candle, the volume distribution within each of the price level in each candle. Unlike traditional volume indicators, this chart allows you to see exactly where buyers and sellers activities are active, helping you to identify key levels of liquidity and market sentiment on the chart. Buying volume is displayed on the right side of each candle. This is where the volume side, the buying volume is displayed, while the selling volume is shown on the left side of the display of our layout. This layout makes it easier to assess whether buyers or sellers are dominant in any given price level. So from this you can understand that by the right side we see buyers, by the left side we see sellers. Their participation in the market. Another key element of this is the value area. The value area is which represents the range where 70% of trading volume occurs within the candle, and the value area is from this horizontal line to this horizontal line of each particular illustration of the candle's volume footprint. From this area to this area is where you see, from this line here to this line is where we see our value area, from this line to this line. Then we have the upper boundary of the range. It's called the value area high, which is this upper part of the volume area. This upper part where you see this line is the upper boundary, while the lower boundary is the lower line. From the name you would understand. This level often acts as natural boundaries for price movement, helping you to anticipate potential breakouts or reversals. So this is basically what it's all about. Now, a positive delta indicates more aggressive buyers. A positive delta, and this is where you will see your delta reading. Positive delta, it is indicated by green writing, and not only that, you will see is in a positive form, while the negative delta has a minus sign in front of it and is also in red. So the positive delta indicates aggressive buying, while negative delta indicates stronger selling pressure. For example, if you see an upward price movement accompanied by a positive delta, it means buyers are driving the trend. Conversely, when you see an upward move occur with a negative delta, this might signal weakness in the trend. This is basically what it means. You can see an upward move here with negative delta. It means weakness in the trend. Now, by using these features together, buyers and sellers volume, POVC, POC, value area and delta. I did not tell you what the POC is, and the POC is this particular black area on the chart. The POC is the black area, is the point of control. This is what it means. POC, all these black sides on each volume candlestick or each volume bar, volume footprint bar, is what the POV is, point of control. So you will gain a view of market dynamics that can help refine your trading decisions. This tool doesn't just show you where price has been, it reveals why it moved there and what might happen next. With this deeper understanding, you would approach your trading with greater confidence and precision. Now let's see the best setting and trading strategy for the TradingView Volume Footprint Chart. Now that we understand the basics of the TradingView Volume Footprint Chart, we are going to dive into the best settings and a powerful trading strategy to maximize its potential. To get started, you would want to optimize your chart setting for clarity. First, you set your row size to auto. So going into our chart setting, we'll set our row size. As you can see, this is row size. We'll set it to auto. It is at auto, it's already set. This allows the chart to dynamically adjust based on market volatility, giving you a clearer picture of price action. Next, we need to keep our ATR length to 14. 14 is the default value, as this provides a standard measure of volatility. For the type of setting, choose delta. Type of setting, we choose delta. As you can see, type of settings, we set it to delta. When we set it to delta, this simplifies your view by showing you the next pressure between buyers and sellers, making it easier to spot trends and reversals. So this is basically how to set this up. The next is to maintain your value area at 70. The next is to maintain your value area at 70, and this value area at 70, as you can see, it's 70%. This industrial standard highlights where the majority of trading activity occurs. If you find your chart looking too clustered, consider disabling the point of control. Remember, the goal is to have a clear, actionable view of the market. So if you feel your chart is too clustered, you can just disable this POC. But for now, I will leave the POC on. Now let's explore a step-by-step strategy using the volume footprint chart. Now we are done with the settings, we explore a step-by-step chart on how we can use this to our advantage. The key is to look for alignment between price movement and the volume direction. You have to look for an alignment between price direction and the volume chart. The strong bullish signal occurs when you see an upward price movement combined with positive delta. As you can see, upward movement with positive delta. As you can see, the positive delta over here. This is basically what it means. Conversely, a strong bearish signal is presented when a downward price movement is accompanied by a negative delta. As you can see, a downward price movement with a negative delta. This is showing more selling volume. Now, to implement this strategy, we start by identifying the key support and resistance area on the chart. And if we look at this, we can spot this area to be a key support area. I'll be using a line chart to make this. No, I think I'll use a resistance area or a support area. So this particular area, as you can see, this is a major resistance before it got broken at this area, before it became a support. So I can see that this is a major support and resistance area. This side is also a major resistance area in the chart. If we look closely, we would notice this other area too is a strong area in chart. This is also a strong support area in chart. So for our strategy, we'll be using these areas. When price, remember, we have to zoom in on these levels using the volume footprint chart. As price approach these critical levels, we have to analyze the volume profile for confirmation or divergence. For instance, if price is testing a support area and you see a strong buying pressure, if we look at this area for strong buying pressure, once we see a strong buying pressure, I don't know why this chart is not showing what I'm coming in and going out. Excuse me. Yes, a strong buying pressure. Once we see a strong buying pressure, it indicates, it also suggests that the support area is likely to hold. And as we can see, when price got to this area, we can see a positive delta and a positive delta signifying strong buying pressure. This is how we can take charge of this strategy. Be conscious of whatever you see at this area, because it signifies that the support is going to hold. Then be conscious of price movements that aren't supported by volume. If you see price moving up but the delta remains negative, if you see price moving up but delta remains negative, as you can see in this area, this is also a support area. If you look at this area on my chart, this is a resistance area. We are expecting that this area would fall in line to be a place for support for price to get to and reverse. But when price got to this area, we can see negative delta. So it's trying to say you have to be conscious when price is coming to an area of support but it is not accompanied by a positive delta. The delta remains negative. This indicates that a weak or unsustainable move will occur. This divergence often precedes reversal. The precedes reversal is a sign of reversal. So you would have to be conscious when price gets to this area and shows such signals. This can provide excellent entry points for countering trades. Remember, divergence is very important. It can be a sign to show a reversal. Remember, the volume footprint chart is most powerful when combined with other technical indicators or other technical analysis tools used to confirm breakout. Don't forget that you can use this to confirm breakout, to spot early reversals, and to refine your entries and exits. By mastering this tool, you will gain a deeper understanding of market dynamics and improve your trading decisions overall. So we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on your notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.